Hey everyone, welcome back to the Nadlin Forum Podcast Daily. I'm Ruby, and as always, I'm here with Lior. Now, if you've watched the headlines, or honestly, just checked a mortgage app, you've probably noticed things are moving. And by moving, I mean stampede to the refinance office moving, right, Lior?
Yeah, absolutely, Ruby. Honestly, these numbers they're wild. Last week we were talking about rates kind of leveling out, but now we've got refinance applications up 58% week over week. That is not just a blip. People are jumping on this drop in rates like it's Black Friday for mortgages.
I mean, look, the Mortgage Bankers Association is saying it's nearly a 60% jump overall, and that's with the 30-year fix down to 6.39%, which, let's be honest, maybe a year ago you'd say 6.39, no thanks. But after the last few months, that's suddenly like bargain basement territory.
I want to add, it's also not just the rate. It's the fees coming down too. Lower upfront costs. So some borrowers are finally seeing those savings add up. And it's mostly homeowners with big loans. People with, jumbo-sized mortgages, they're the first in line. Actually, I had a call just 2 days ago with a client in New Jersey. He had this huge mortgage. And by moving fast, locking in the new rate, he managed to save $610 a month on his payments. That's massive. That's like 2 car payments. Maybe 3 if you drive a beater like mine from 99.
Oh, mate, add in fuel in Australia and that's your whole petrol budget too. But seriously, I think the other part that stands out, refis are now making up nearly 60% of all mortgage applications. That's a huge tilt away from purchase activity, which, we'll get to that. But this rush? I feel like we haven't seen that since, early COVID days, when rates dropped and everyone tried to cash in?
Yeah, maybe even more aggressive, honestly, because the MBA said the average loan size on refis just hit its highest ever in 35 years of the survey. There is urgency to grab this now, while there's still potentially more to come from the Fed. But more on that in a minute.
Yeah, let's hang on to that thought. So much to unpack.
So, Ruby, one number that really jumped out for me in all this, adjustable rate mortgages, ARMs. Right now, they're 12.9% of mortgage applications. We haven't seen that kind of interest in ARMs since 2008, and that's wild, considering how much people freaked out about ARMs after the crisis. People still ask me every week if it's going to be, the same mess as back then.
Totally. My mum always thinks ARMs are like some ticking time bomb, but the truth is modern ARMs are totally different from, those weird Wild West loans before 2008. Now they're designed for more predictability, like you actually know what that reset's going to look like, fees included. And for a lot of people, the lower intro rate is super appealing when you want to keep payments down, especially if you're only planning to stay in your home a few years.
Exactly. Mike Fratantoni over at the MBA mentioned, these ARMs are about 75 basis points cheaper than the standard 30-year fixed. If you're looking for monthly savings and you can handle the risk, meaning you're not scared about where rates might be in 7 or 10 years, it starts to look like a smart play. Most borrowers right now actually want that mix of savings and a bit of predictability.
Yeah, and there's the whole lifestyle thing too. My friend Alex in Sydney just went through this starting her own business. She needed cash flow, and the lower rate on her ARM made a huge difference in her getting through the lean months. She's not in the US, but the logic holds. She reckons she'll be able to refi again if things shift, or just ride out the fixed period. It's a tool, right? Not a trap. I don't know, Lior. Do you see borrowers shifting that mindset more these days?
Yeah, actually, more clients are open to ARMs than I've ever seen before. People are more educated this cycle. They remember what happened before, but now they're asking the right questions. How does the reset work? What's the cap? All that. smart borrowing, but there's always risk. It's not for everyone. You still need a plan for that future payment. But for the right person, the savings upfront are real.
And it's nice to see, after last episode where we talked about like credit getting a bit easier, that at least borrowers have a few more options than just the fixed and done deal. Okay, so we've hyped up the refinance rush and ARMs are having their moment. But what about people actually buying homes? I mean, purchase mortgage apps are only up 3% week on week. Nothing like that wild swing in refis.
Yeah, you're right. The purchase market is kind of cautious right now. Even though applications are up a little, buyers seem to be holding back. It's not just affordability. Although, yeah, that's still a big one. It's also uncertainty with what the Fed's about to do. Everyone's just, hedging their bets. They want to see where rates go after the next meeting.
That's what I keep hearing too. A lot of would-be buyers just pressing pause. They saw rates hit 6.13%, which is the lowest since the end of 2022, and you'd think that would be enough to bring out more buyers. But everyone's nervous about the Fed, and then there's that risk the market snaps back up if bonds react badly, right?
Absolutely. And nobody wants to get caught waiting too long. That is the bottom game. It's tricky. I keep getting questions. Should I wait for the Fed? Should I refi now and risk missing a bigger saving if rates drop again? Nobody knows where that line is, honestly. My feeling, don't get greedy, don't get frozen. There's always some risk, but sometimes it pays to act while the window's open. We saw similar thinking in previous episodes, remember? Like, right before the Fed cuts, being ready matters more than calling the exact moment.
Yeah, that's so true. Like when we talked about being prepared rather than chasing the absolute perfect rate. Sometimes it's just about getting off the sidelines at the right time for you. Before we wrap, Lior, is there one question you think everyone should be asking themselves right now?
Yeah, I'd say, what's your goal? If you want lower payments and the opportunity is here, act. If you're comfortable waiting and can handle the risk, fine. But don't miss your shot because you froze. Same thing for buyers. Ask yourself if the house is right, not just if the rate is perfect.
Brilliant. And all right, that's all from us today. The mortgage world is changing by the hour, but we'll be back to break it down again soon. Lior, thanks for the stories, and thanks for not talking us into a 2008 ARM disaster.
Anytime, Ruby, and thanks to everyone for tuning in. We'll catch you on the next one. Stay smart, stay prepared.
See you next time on Nadlin Forum Podcast Daily. Cheers, Leah.
Bye, Ruby. Bye, everyone.